Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 10th, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is basically what's keeping me recording this video, so please do hit the like button. Again, we have a nice presentation for you as always. Stocks are pulling back after hitting records. This is a big deal apparently. People are already freaked out. But a 10% pullback would be very healthy, so we'll look where that would take us. Even though, we just hit new records, the market breadth is kind of getting worse actually. So we'll look again at the advanced decline lines and where they're taking the stock market. Treasuries really didn't go anywhere, so we'll see if a move higher would mean anything for the stock market. Copper and natural gas are approaching new records. Natural gas actually hit new records, and so far not seeing any bad inflation yet in the various securities I watched. So we'll look at dollar, gold, and silver. And recently Bitcoin had a flash crash, and we'll see if it's a beginning of something bigger. If you're a subscriber, I have two newsletters. I have what's called Elite Newsletter, where we trade Forex, ETFs, various large cap stocks. We're going to cover all of this stocks. That's a paid newsletter. And of course, you can see there's quite a bit of stocks we're going to cover in the speculator newsletter. If you are a subscriber, if you are not, consider signing up by going to Master Charts Trading and clicking on products. All right, let's get right to it. S&P 500 again. We hit new records on the 3rd of September, so last Friday. Basically, we're pulling back all this week. So this is the pullback. 1, 2, 3, 4 days. It's not really something to be terrified of. We had something of this nature before. You can see we had, pullbacks of this nature. Now, you can kind of see on this chart the four lines. We see the green, blue, the red, and the yellow lines. So these are my support resistance lines. You can see the last time the support resistance line was hit, the green line, which is basically, it's the place where I normally take profits if I had a position from way below. So let's say, we entered back in May of 2020, I would consider taking profits around the green line. Now you can see that this hasn't actually been hit since last October for almost a year. It's already September. So it's very much possible that we will finally pull back, towards at least the green support resistance line, which is currently at 4323. But even better, if we pull back towards the blue support resistance line, which is at 4042. If we also look at the 200-day exponential moving average, we can see that it is around the same area. So it's like a normal kind of healthy pullback. Will it happen? Nobody knows. Will it be bad for the stock market? No, it will be great for the stock market because it will present new buying opportunities. Right now, there's very little new buying opportunities because we can say that we're overbought. But overall, obviously, we're in a bull trend. To say that we are going to be in a bear market, we need to do that. We need to drop there. Currently, 3424. You can see that's a 24% drop from today's levels. So it is going to be quite difficult to get there because once again we have excellent support around 4,000 right now. So we will be watching for a pullback towards those levels. If they materialize, we'll start buying. Dow Jones, kind of general same principle. The record was hit in August, 16th of August there. Since then, we kind of traded sideways and now are pulling back. So again, a pullback towards the good support resistance level would be around 32,000. That's another 7.5%. So let's wait and see. Really, not much is different about Dow Jones versus S&P. Again, broke out back in May of 2020 and never looked back. So we will just be watching Dow Jones, same as S&P. Here's Nasdaq. So Nasdaq is even stronger. I believe those are new records. Let me see if they hit new records. So here's the high of 3271. Here's high of 3278. So yes, we hit our new record on Tuesday of this week, 7th of September 2021, and pulled back slightly. Once again, the correlations between S&P, Dow Jones, and Nasdaq are quite high. You can just visually see it on this chart. We broke out again back in April of last year, 2020, and pretty much never looked back. So a pullback, a little bit of a pullback is normal to be expected. This is weak support. So weak support is at the green line at 362.23. Strong support is at the blue line, which is at 336. Again, will we get there, or will the stock market just make a new record? Is anybody's guess. We are keeping a bullish outlook. So once again, to turn this ship around will require significant effort. This is the bear market levels, 25% down from today. Anything is possible, but not very likely in this time, in these times, so to speak. Small caps. So small caps were of most concern to me. They never made a new record since March. You can see new records back in March. Overall, again, they are similar to Dow Jones and S&Ps, and they broke out also in May of 2020. We had one last opportunity to get in on small caps back in September of last year. They made a record here in in March of this 2021. But then, since then, they were trading sideways, and new records are very close at 234. But not yet. So this is concerning, and this is a divergence, whereas the large caps keep continuously making new records, small caps are trading sideways. So yes, it is definitely of concern, and next section will highlight these concerns. So here they are. These are called advanced decline lines. So I have already explained this, but I will very briefly again explain how the advanced decline lines are constructed. So if we go to StockCharts.com, type in the symbol $NYAD. Now, I prefer to use New York Stock Exchange composite advanced decline lines versus S&P or versus Nasdaq advanced decline lines. From personal experience and just looking at the various charts, by far these lines are better. So yes, this symbol is better to look at. So when we type in this the symbol, we need to change the type to cumulative instead of candlesticks. Remove all the indicators, and you can put the price down here with a parameter of S&P 500. So that's just for comparison's sake. So here what we're seeing is advanced decline line made a new high right there in July. Very close. We came so close just a few days ago, but we didn't yet make a new record. So far the new record has not been made for advanced decline line. So this is a divergence, with S&P, whereas S&P kept making new records, advanced decline line did not. So what does that advanced decline line even mean? It means that we're taking declines and subtracting them from advances. So every day we're going to say that, we have so many stocks, Some of them have moved advanced, moved up, some of them have declined. We're going to take the declines, subtract them from advances, and generate a number. And then what we're going to do is we're going to add this number to the yesterday's number. So that's why we're making it cumulative. Once again, the reason being is because if we're going to make it just like a line, it doesn't make any sense. It's just a number. You know, how many advances, how many stocks moved higher today, how many stocks moved lower today. We're going to subtract one from the other. You can see that today, for example, we had declines outnumber advances, and it was minus 1289. So more stocks declined than advanced, but this is a gibberish. We don't really know what it means, so we need to make it cumulative to make some sense out of it, and thus we construct a advanced decline line. So the other, excuse me, I think I clicked on the advertisement. The other line is we can do the same thing but with the volume. So if the volume is positive for today, if the volume was advancing for the advanced stock, then we're going to say plus 1 or plus volume. We can again put it as a lines, and we can see that today, for example, if we take all of the volume that advanced and subtracted from it all the volume that declined, we're going to see that overall there was a decline in this advanced decline parameter. So once again, we're going to need to make it a cumulative to make some sense of it. So looking at this chart again, we can clearly see this divergence. So the high was made here in June, and today was actually a new low. This is a clear bearish divergence. All right, so I was hoping that we're going to, you can see that we advanced and we moved above this previous peak from August, but that did not last, and now we collapsed again. So once again, the volume is actually not good right now. So advances less declines volume is continuing with this divergence. So this is again showing that a stronger and stronger chance of a pullback is brewing indeed. So once again, I would not be surprised if we're going to see at least a 10% decline easily. And once again, this 10% decline would be extremely healthy for the stock market. Right, moving on to treasuries. So treasuries really are bought during the times of stress. Currently, I think they're in a bear market, in a downtrend. So a bearish signal occurred back here in January. Latest bearish signal occurred right there on July 9th of 2021 this year, but really didn't really go anywhere, and treasuries have been trading sideways. Bullish levels, in other words, where I would think about buying them, are projected to be, getting closer and closer to the price action. So again, with my indicators, you can project them into the future now. So if or when we see a close above this blue support resistance line, we're going to say that we're likely going to be in an uptrend from here on. Hasn't yet happened. So treasuries are usually bought during the time of stress, during the time of uncertainty, and yeah, sure, the times are not really certain right now, and there's lots of weird things happening in the world, especially with the pandemic related disturbances, but the fear is not pronounced in the markets yet. So we're going to reserve judgment for now and going to just look at what's going to happen and not jump to any conclusions. For now, again, I think that we're in a bear market for treasuries. So I think the treasuries could continue lower from here easily. Moving on to commodities, here's copper. Commodities in general have been on a tear. So here's copper. I didn't really trade copper, that's the purple arrow. Previously we did, this actual alert back from June of last year, and notice this enormous run. This is a enormous run for a commodity. Notice how far it went. It went from $2.50 to $4.80, almost 100% increase. The same general principle, we simply look for a breakout above the blue support resistance line. You can clearly see it on this chart back in June of last year. So copper has been really on a tear. It came down a little bit, and again, normal kind of corrective action. So this is what I'm sort of expecting for S&P, kind of normal corrective action. But it's still in an uptrend. I wouldn't short it. I would look for buying opportunity. And here it was the buying opportunity again, right there on 20th of August. So already this is a profitable trade. And I would have been, advancing my stop to entry at the very least. Most likely we'll make a new high here. Of course, the biggest news is for natural gas. Natural gas, we actually traded it. Again, congratulations. If you recently opened natural gas, you can open it via futures or even natural gas UNG ETF. So you can see all of these up arrows. Previous alerts were back in November, December of last year and January were successful because this new peak. Latest opportunity really was back here in May, and it just paid off in spades. I mean, look at this 87% run from $2.68 to almost $5. We're almost doubled. And once again, notice that we would have not been stopped out. Our stop is at the blue support resistance line. So maybe we'd take profits, but overall we're still in this trade. So congratulations once again. And I keep hearing, from fundamental analysts, there is inflation down the line. So let's look at that now. So here is the dollar index, dollar currency index. So inflation, in my mind, yes, price inflation, but also we need to think about where is this, how can I say it, in relation to what? So if the inflation is getting bigger, the buying power of the, in this case, dollar, because we're talking about United States here, of the United States dollar is getting lower. So we need to look at dollar in relationship to other currencies, and dollar in relationship to other currencies have been gaining. Okay, did you get that? The dollar has been gaining against other currencies, and I think it's actually in an uptrend. In fact, today we had another signal. Okay, so that's another nice, good-looking signal. All right, so when the dollar is gaining, by extension, precious metals are losing because precious metals are traded in dollars. So here it is. XAU divided by USD. The bigger the lower part of the equation, the stronger it will pull down. So for now, notice this price action. It's really interesting. Notice how we're touching this red support resistance line. Today we almost closed below it. If we close below it again, I think I will short it. I will short gold. Okay, I shorted it before here. I think we're getting kind of close again where dollar will move higher. You see, precious metals will move lower. This is contrary to what most people say when they look at the prices of things like eggs and gas and apartments. I'm saying it's not the same style of inflation. You see, if we would be seeing like panic type of inflation, then gold would be appreciating, but we're not seeing that right yet. All right, we could be seeing it, but we need to see a breakout for gold above 1857. It hasn't yet happened. In fact, if we close below this 1875 level, I will short it, and most likely will make a new low. Okay, here's silver. And last week I actually pointed out, this is a nice freebie for you guys. This is a signal right there. You see we touched this red support resistance, closed below it. So if you shorted it right there on the 6th of September, you would have already made money, and I would have advanced the stop to entry by now. Okay, so that's another indication that we may not be seeing 1970s type of inflation. And here's Bitcoin. This is a live chart. Bitcoin is traded 24 hours a day. I own Bitcoin. I bought it right there. I'm in slight net minus right now. My stop is at this red support resistance line. So it's at 41635. I'm reading it right off the chart. I would close my long position because I bought it right there at 48,567. I would close it at 41635. Because at that point, once again, I would consider Bitcoin to be in a bear market. And this latest action is just really out there. You can see that I wrote on this date, El Salvador begins using Bitcoin. Now, if you think about it, when they actually said that they're gonna buy like 400 Bitcoin, which is not an insignificant amount. So they bought 400 Bitcoin, and wouldn't it make sense for Bitcoin price to rally? No, it dropped. Okay, so this is a classic example of price dropping on good news. So I would be wary of buying more Bitcoin until we clear this level at 50941 again. If we close below 41635, I would exit and potentially short again. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on products, and sign up for one of the packages. I have 3 packages right now. One is the trading indicators, which are these lines on the chart, the green, blue, red, and yellow line. Easily trade pretty much any security. You can see I have lots of examples. Indicators and newsletters. So if you want to also hear what I have to say about the various stocks and ETFs, this is the elite newsletter. We trade ETFs, large caps, forex, commodities, and the speculator, where we trade all kinds of interesting setups. So it's breaking out stocks. Of course, we also have the ultimate bundle, which adds the stock screener. So the stock screener, you can also find stocks which are breaking out above the blue line, for example, or breaking down below the red line. So you can, for example, trade on your own. If you're interested in doing it, you can see there are many different setups and or rather stock lists. So one of my favorites is this all stocks with options, and this is where I get my ideas for the speculator newsletter. All right, that's it for this week's recap. If you have any questions, please let me know. Don't forget to like the video, share it with others. Thanks for watching, and have another great trading week. Bye bye.